Welcome to Healthcare Entrepreneur Academy, where we seek to educate, motivate, and inspire professionals into starting their own healthcare businesses. Learn from leading healthcare entrepreneurs and other business experts as they share their journey and provide a glimpse into their playbooks for success. Loaded with valuable insights and actionable strategies, this show will guide you on your path to freedom. Now, please welcome your host, entrepreneur, healthcare practitioner, and MBA, Jason Duprat.
This episode is sponsored by my free presentation for the Ketamine Academy. If you're tired of long hours, constantly being on call, or having to give up your nights, weekends, and holidays, all for an employer that only thinks of you as a productivity number that they're trying to maximize, then it's time to break free from the hospital grind, become your own boss, and finally take control of your professional trajectory. It's time you start your own practice. I know it sounds really scary, maybe even a little impossible. I get it. You got student loans, you're working tons of hours, and you may not even be a physician. Well, I am here to tell you that it's absolutely possible. Starting my own clinic was exactly how I started my healthcare entrepreneur career, and there's one specific type of clinic that almost anybody can open. Ketamine therapy is one of the most promising treatments in the fight against depression, PTSD, and chronic pain that we've ever seen. And thousands of patients across the country are looking for clinics in their area. The problem is that there aren't enough yet, and these patients need someone like you to open a ketamine practice in your hometown. Go to ketamineacademy.com/presentation for a no-cost 60-minute training on how to gain more freedom by opening up your own clinic. On the presentation, you'll discover why opening your own private clinic is a better decision than working more overtime or going back to school for another degree, why this one specific niche clinic is the easiest to open and doesn't require a bunch of cash to start, and how anyone can open this type of clinic, even if you're not a physician, by just following a few simple steps. So to register for this free training, just go to ketamineacademy.com/presentation. Hey everyone, and welcome back to the Healthcare Entrepreneur Academy podcast. I'm your host, Jason Duprat, and I am coming at you again from New York City. And we are on our third week here with the Navy, working in the hospitals, so trying to squeeze these recordings in between hospital shifts. But wanted to give you guys all a huge shout out and a big thank you for the encouragement and the support, because today is episode 100. And without you guys reaching out, messaging me, letting me know you're listening, sharing episodes that you found helpful, and helping the show get out there so that we get more and more listeners, I would not have had the motivation to keep on going. So thank you for all the support. Thank you for everything you've done and for listening and sharing. I really appreciate it. Today, I wanted to talk a little bit about buying a small business. So obviously, as you know, COVID-19 has taken a run on the economy, essentially, done some pretty significant damage to a lot of small businesses, unfortunately, especially the brick and mortar businesses. And a lot of these, even healthcare businesses, are shockingly getting hurt. That, the ones that are doing non-essential treatments and procedures and seeing otherwise fairly healthy patients. So I want to talk about what it's like to buy a small business, things that you should be thinking about, where you can go to look for small businesses for sale, and sort of how that whole process works. Because as businesses are forced to shut down because they've run out of capital, they don't have enough cash flow to pay their bills or their employees or themselves, then you're going to start to see a lot of businesses go under or go for sale. So this could be an opportunity to scoop up a business that's on the market, or if you're lucky enough to find one that didn't actually hit the market yet, then you might be able to find an even better deal, and we'll talk a little bit about that further into the episode. But I think there's going to be a lot of great opportunities, a lot of great buying opportunities, whether you are buying vertically or horizontally. There's going to be ways where you can benefit as a business owner, or maybe this is your first shot at being a business owner, scooping up a business that's for sale. There's a lot of opportunities, and when the majority think that there's blood in the streets, and right about now is a pretty good indication of that. Although actually the stock market is going up, believe it or not. I think that's a lot of delusional thinking. I don't think we're out of the woods yet, and so to see 300-400 point jumps up in the stock market is a little premature. We talked about that in another episode, how the stock market is just a a gauge of people's perceptions and a very short-term gauge. So we'll see what happens there. But the stimulus package obviously is encouraging a lot of investors and business people, but there's still absolutely going to be a lot of great deals as it relates to buying businesses, starting businesses, buying real estate. Maybe real estate doesn't take the hit until several more months down the road. We'll see how that plays out, but there could be some potential there. I don't claim to be a predictor of the future, but I see some opportunities that may be opening up. So I wanted to talk a little bit about what it might look like to buy a business if things go on sale here in the near future, which I think business-wise they definitely will. Real estate, we'll see how that plays out. But obviously there is right now a buyer's market. And so the buyer has a lot of leverage. Sellers, if they're trying to get top dollar and they've had to shut down their business for any period of time, or if they're still shut down, they are not going to be able to ask for top dollar anymore, because you can only ask for top dollar when you're making top dollar. And so when you're looking at the valuation of a business as a buyer, you are typically looking at the EBITDA, which is what you look at in a larger company, earnings before interest, taxes, and amortization. Or when you're looking to buy a small business, typically it's not reported as EBITDA, but it's actually going to be described as seller's discretionary earnings or owner's benefit. And typically that is very close to the business's net profit. So what is the owner? Well, it would be the business's net profit plus the owner's salary. So what is the owner putting in their pocket as profit at the end of the day? That is how a business is valued, and the valuation is determined in most cases. And for small businesses, you'll see valuations that typically range from 2.5 to maybe 5 times their owner's discretionary earnings or the owner's benefit or the owner's profit. So there's also some evaluation method that looks at gross earnings, and some valuations are based on 50% or so of gross earnings from a small business. So when you're looking to either buy or sell, obviously you want to know how to place an approximate value on a business. And those are the two main methods. So multiple of earnings or percentage of gross sales. Now, when you're looking to buy a business, there is a couple different strategies you might be using, and those are things like horizontal integration or vertical integration. So if you already have an existing business, those are two types of strategies that you may look at or think about when you're looking for businesses for sale. And so horizontal integration is buying another business that operates in the same industry and at the same level of the supply chain. And horizontal integration would be buying a business or firm that operates at a different level of the supply chain. So maybe, for example, you're a restaurant and you're considering vertical integration. Well, maybe you're going to buy your supplier of, Angus beef, and you're going to go buy some small farm and vertically integrate buying some of your distributors. That's one example of a vertical integration. So some things that you want to look at when you're considering buying a business are, obviously, we just talked about valuation. That's very important. But you're going to want to be asking the owner, and you're going to be wanting to find out some information, because you're going to be needing to do your due diligence. So you're going to want to know how long the business has been open. Obviously, the longer the business has been open, the better your chance of being able to step into that business and continue its already existing success and profitability. Typically, if a business has been open for 10, 15, 20, 25 years, they're doing a lot of things right, and they have an established brand, they have an established reputation in whatever it is that they're doing or whatever market they're in. So the longer the business has been established, typically the better, the less risky it is for you as a buyer. And typically, I personally, if I were looking at a business, I wouldn't be interested in buying anything that was open less than 3 to 5 years, unless I had some sort of very intimate knowledge of, the previous owner or something like that, or maybe it was somebody that I worked for or something. I might sort of bend that general rule. But in general, obviously, the more established that business is, the safer it is. And when it as the safety level increases and the risk goes down for the buyer, the price tends to go up, or those multiples on the valuations go up. So that's one thing to keep in the back of your mind. A business that's been in business for 25 years is going to fetch more of a top dollar than a business that's been open for 1 year. One other thing that you want to ask when you're looking at businesses is, if it's such a successful business, then why is the owner selling it in the first place? So you want to find out what the owner's story is. And, there's a lot of different reasons for selling. And certainly if the seller has advisors or is an astute seller, which most are going to be, if they're in business and they've run a successful business, they're not fools. So they may have formulated or concocted a story. So you have to be able to not only just ask for the story, but see if it makes sense, see if there's any way you can validate what the story is. For example, is it a 65-year-old businessman who's had the same business for 25 years and he wants to retire? Well, that kind of just makes sense. If you're looking at somebody at that age range and they've run this business for a long time, it makes sense that they would want to retire. And so that could be a valid reason for wanting to sell a business. So you want to know why it's for sale. You also want to know the financials. You want to look at the top line. The top line is very important, but so is that owner benefit. And the key when it comes to evaluating the financials is to not just look at tax returns, because one of the main advantages of owning a small business is essentially the owner benefits in the form of tax deductions and tax write-offs. So what is reported on an actual tax return may, as far as business income, may be substantially less than the owner is actually taking home or the owner is actually benefiting from. And so if you go to buy a business that's for sale by like a broker or something, they've already done all the math and they've added back in the owner benefits and calculated that into the sales price. So, for example, maybe the owner has a business car that they're also using as a personal car. Maybe they've got their wife's car as a business expense. Maybe they're paying their children as employees, but their children really aren't doing much work. There's a variety of different things that business owners may have done to reduce their tax liability and therefore look less profitable on a tax return, when in reality, their actual owner benefit is substantially higher. So you do want to look at those financials and you want to be able to make sure that they can prove the numbers that they claim on any financials. So you want to have an independent appraiser, an independent auditor come through and look at all their bank accounts. And if you're a seller, that's one reason, or if you're a business owner, to make sure your books are immaculate. You should make sure to always separate your personal from your business expenses and always have different accounts, and always make sure that you are saving your receipts and that your books are very well organized, because if you ever want to go sell your business, this is what an astute buyer is going to be asking for. And you want to make sure that you can prove your numbers. And as a buyer, you want to make sure that that seller is able to prove all their numbers through, you're going to look at bank statements. You're going to match all those up to their P&Ls. It's going to be pretty in-depth. Obviously, the higher the price of the business, the more in-depth you're going to go on your due diligence, because the risk is going to increase the higher the price. So you definitely want to be able to prove that the numbers are legitimate. So typically you'll be looking at all those bank statements. You'll be looking at 3 to 5 years of tax returns, and you're going to be analyzing their inventory if they have inventory. And so these are all important things to keep in the back of your mind as you're considering buying a business. Also, you're going to want to be thinking about or asking, what is going to be the non-compete that the owner is going to be willing to agree to. Typically it's an industry non-compete. And if it's a local business, typically there might be a radius set to that. Is there going to be any training provided by the existing owner to you as the new owner? That's typically negotiated in. Also, most businesses are sold as an asset purchase arrangement, because when you're buying a business, you do not want to buy an existing business's liabilities. So you're going to be purchasing the assets, and the assets are not only the physical assets, but it's going to be things like goodwill and blue sky. So you want to make sure that this is going to be an asset purchase is going to be something that the buyer is willing to provide you. So when you're looking for a business for sale, and you're looking at the what the owner has to offer or what the owner is listing, one of the things you want to look for is if they're willing to offer seller financing. So in most cases, small businesses can oftentimes be very hard to get a lender to approve for financing. And so you want to make sure that the seller is amenable to seller financing. And initially, they may not put that out there. They may not put that in a listing. They may not put that out there in any sort of advertisement. But most business buyers out there don't typically have hundreds of thousands of dollars of cash laying around to just pay cash for a business. That's incredibly, incredibly rare. And so if the seller has had their business up for sale for any length of time, they will have come to that realization already. Typically, they might be lucky to get, $50,000, $100,000, $150,000 in cash, and then the rest of the purchase price is going to have to either come from a lender or from seller financing, because it's very rare that a buyer is going to be having, any more than, $100,000, $150,000 in cash. And I've actually talked to a business broker who's told me that, so I'm not just making that up. But the seller financing is going to almost always be something that's worked into the deal. And it's really important to get seller financing anyways, because just the fact that a seller is willing to offer seller financing allows you to have a little bit more confidence in their numbers. Because if they're going to loan you $200,000 and you're going to make payments on that $200,000 to finally become the owner of that business once it's paid off, then, they're not going to want to loan you that kind of money unless they are very confident that the business is doing the numbers that they say it's doing, and that they're obviously confident that you can run the business and that you're going to be able to pay back that note. So seller financing is very important, and it's actually a red flag for somebody to just flat out not offer at least some sort of seller financing. The more, the better in most cases. And if they're just not, initially out of the gate, some sellers may be a little bit delusional to the fact that they think they're going to get just a cash upfront payment, but that rarely happens, that somebody's going to pay all cash for a small business. And over time, they typically will start to be more willing to consider owner financing. But when you're looking for a business, there's several places you can go. And typically now, the most common places are online brokerage sites or online listing sites, and sort of like the MLS, where you go to whatever, realtor.com or the MLS, and realtors list the site. Realtors list houses they have for sale. Very similar in buying and selling businesses, where brokers will list their businesses that they have for sale on various sites. Some of the more popular ones are BizBuySell. BizQuest is fairly popular. Some of the newer ones are Flippa Network and Empire Flippers. But on all those websites, you can look for businesses that are for sale. And typically, you can get a little bit of basic information on as far as their numbers. And to get more information, you almost always have to sign a non-disclosure agreement, which is totally fine. But that's typically the first step to getting in there and getting more details about the actual business, where it's at, like the specific location, what their products and services are, and financial information. You'll have to sign a non-disclosure agreement. So once you find, a business for sale on one of those sites, then you are going to ideally have your own broker working on your side to help you. You want to advocate for your side. You need a broker or a advisor of some sort. Obviously, you're going to bring in your own CPA and your own attorney once things start to progress. But ideally, you have a broker working for you as well. And those two brokers, sort of like in real estate, they will typically split the commission or do some sort of a commission share. And that's sort of the initial steps. And then obviously comes a lot of due diligence and meeting with attorneys and advisors like your accountants and stuff before closing the deal. So that's what it looks like to buy a small business, some of the basics. And one thing that I would recommend is really starting, if you're interested in buying a business in the near future, is developing your network, letting everybody in your network know that you are in the business of buying businesses and that you are interested in taking conversations further with anybody who might be interested in selling their business. And you can let your network know, whether it's your CPA, your attorney, all your friends, your colleagues, some of the criteria. And they can start to, if they hear of anything, start to send you some leads. The best deals when it comes to just like real estate, the best deals when it comes to buying businesses are getting the off-market deals. So before they've had a chance to talk to a broker, some business owners, once they talk to a broker, the broker's already got them in sort of this delusional mindset that they're going to get 7x their earnings, and that they're not going to have to do seller financing. And the valuation is just driven to a ridiculously high point, all the way to the point where it's not even worth buying the business. And then because these owners who have already consulted some of these brokers, because obviously it's in the broker's best interest to get the top dollar too, because they get typically a percent of the sales price. So they can make a lot of money on these transactions. So they want to drive the price up too. So the best, just like in real estate, the best way to get the best deals is finding off-market deals or getting to the business's owner before they have time to consult with a broker, because then things can be a little bit more realistic in terms of price and multiples and things like that. So that's just my little piece of advice on the back end. And anyways, guys, I hope you're enjoying this episode or this podcast, and thank you for tuning in. Like I said before, thank you so much for sharing the episodes. And I'm going to sign off, and we will catch you on the next episode. Have a great one, guys.
We hope you enjoyed this episode of the Healthcare Entrepreneur Academy. Want to connect with more like-minded healthcare entrepreneurs and professionals? Just head over to jasonduprat.com/group to join our Facebook family for real-time interactions, insight, and resources to get you one step closer to realizing your goal. We look forward to interacting with you, but until then, we'll catch you on the next episode of the Healthcare Entrepreneur Academy.